Good morning. It is Monday, December 1st. Welcome back to the Clubhouse Insider. We are 24 days away from Christmas. I hope everyone had a wonderful Thanksgiving. And of course, we like to talk about a lot of things on this channel, but with debt being a huge issue for us, I'd like to point out that this was the biggest Black Friday shopping day on record, with almost $12 billion in spending, and of course, almost all of which on credit. So this may limit future spending for consumers and hinder the ability to increase your home approval. So if you are planning on a mortgage soon, make sure to talk to someone like me about planning big purchases around the rules for pre-approval. So you can see here all these fun articles, raising eyebrows, why we should worry. So spending does, still considered a big deal in the market, and something that's very much affecting things more so than you might, even realize. So with that, mortgage rates are starting off a little worse today. So it's tied really to the global markets. There's a lot of uncertainty. Bonds are being pressured in places like Japan, and yields across the globe are rising. So that's affecting us here. Also, there's a lot of uncertainty around the Federal Reserve next chair. President Trump has announced that he's picked his nominee for a Fed chair, but it's not officially confirmed yet. So markets are reacting. Bond yields moved higher this morning because investors don't know exactly what policy direction the new chair will take until they're confirmed. And uncertainty almost always pushes the rates up in the short term. So you can see here, rates today doing a little bit better than last week, 6.2 range. FHA VA still down under 6. So we've made a lot of really good progress. If you check out this chart here, this is January 1st until now. So we're getting close to a full year's worth of data on interest rates. And overall, you can see it's down and to the right. So rates have tried to do the right things for us and do what all these experts have predicted. Most of the experts predicted that it'd be somewhere around 6% by the end of the year. So it's not too far off from what they were saying. And really what important, economists, people like this that kind of measure the whole big picture, a lot of them like to say that 6% is a fairly healthy market for a lot of different reasons. So maybe I'll cover that here in one of my videos coming up. But right now, the markets still expect about an 80% chance of another Fed rate cut at the December 9th and 10th meetings, which is a little contradictory to what people are saying in the news. But it seems like there's a chance still for a cut. So even with that, analysts don't see mortgage rates falling dramatically. The most realistic outlook is rates settling in the low 6 range as we close out the year, because inflation data and treasury yields, different things like that, that are driving the final moves here in December. So bottom line, the rate market is choppy. Anything tied to the new Fed chair, confirmation hearings, policy comments, guidance, anything at all like that could swing rates quickly. So if you're buying or refinancing, staying ready, watching the data week to week, avoiding those big headlines that are always behind the actual information curve is going to matter more than ever. So if you want to understand how today's moves impact your buying power or refinancing options, please reach out. I'll run the numbers and give you the real story before the headlines hit. So have a great week, everybody, and we will see you next week on the Clubhouse Insider.